Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello. This is Roshonda, agency owner of the Isom Insurance Group, here in the sunshine state of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Friday, February the 20th, 2026. It's Friday, it's Friday, it's Friday, it's Friday. And this is our free Friday Quick Bite, where we answer real questions that came up from clients and prospects during the week. And this week's question was direct, no sugarcoating, no warm up. Is it true insurance companies try to deny claims? Now, I actually appreciate this question because when someone asks it out loud, we can talk about it honestly. This perception is everywhere. You see it online, you hear it in commercials, you hear it after hurricanes, you see it on social media comment sections under every storm post. So today, we're going to unpack it calmly and clearly. No industry spin, no anti-insurance drama, and just real explanations from someone who works in the business every single day. Let's get into it. When someone files a claim, something has already gone wrong. A roof is leaking, a car has been totaled, water is on the floor. Nobody files a claim because life is smooth and peaceful. So emotions are already high. If that claim is delayed, reduced, or denied, it feels personal. It feels like resistance. It feels like someone is trying to avoid pain. And sometimes claims are denied. That part is true. But the real question is why? Insurance is not a blank check, it is a contract. When someone buys a policy, they are buying a very specific agreement. That agreement defines what is covered, what is excluded, what the deductible is, and what conditions apply. Insurance companies enforce the contract. They do not write it at the time of loss. That distinction matters more than most people realize. Here's something that might surprise people. Insurance companies are not profitable because they deny every claim. They are profitable because they price risk accurately. Insurance works on math. Premiums are collected from thousands or millions of policyholders. Actuaries estimate how many claims will occur. They build pricing models expecting those claims to be paid. If companies routinely deny legitimate claims, regulators will step in. Florida has one of the most regulated insurance markets in the country. Carriers file rate requests with the Office of Insurance Regulation. They are audited. They are reviewed. If denial rates spike abnormally, that gets attention very quickly. This does not mean claims are never disputed. It means there is oversight. Let's talk about the most common reasons claims get denied. The first reason is exclusions. For example, a standard homeowner's policy does not cover flood. If rising flood waters enter the home, that claim is not paid under the homeowner's policy. It requires separate flood coverage. That is not a denial. That is contractual language. The second reason is maintenance versus sudden damage. And this is a big one. Insurance covers sudden and accidental events. It does not cover wear and tear. If a roof deteriorates slowly over 15 years and eventually leaks, that is not considered sudden. And let me just pause here for a second because this one it really causes a lot of customers, policyholders to get frustrated. Your insurance policy is not a home warranty. A home warranty kind of covers for wear and tear and those type of things. Insurance is for sudden accidental events. My roof blew off because a hurricane came through. That is considered sudden and accidental, completely out of your control. A hurricane came through, it's an act of God, it blew off your roof. That is more than likely going to be covered. But if you have a AC unit that's 20 years old and it just stops working, nothing happened. There was no lightning that struck it that caused for it to stop working. It just stopped working because it's old. That is considered normal wear and tear, and that is not covered by insurance. Home warranty may help you in that situation, but your homeowner's insurance will not. The third reason is deductibles. Sometimes a claim is not denied, it simply falls under the deductible. If damages totals $1,800 and the deductible is $2,500, there is no payout. That feels frustrating, but it's math, not refusal. The fourth reason can be misrepresentation. If application information does not match reality and a claim investigation uncovers that discrepancy, problems can arise. None of those scenarios involve a company waking up and deciding not to pay out of spite. Yes, let's be real. There are adjusters who are overloaded. There are delays. There are disagreements about the scope of damage. There are communication breakdowns. Insurance is run by people. People are imperfect, but a frustrating claims experience is not the same as a coordinated effort to deny every claim. Most disputes happen over interpretation of coverage, not intentional wrongdoing. Fraud absolutely impacts how claims are handled. When fraud increases, carriers tighten reviews. When reviews tighten, more documentation is required. More documentation feels like resistance, but scrutiny is different from denial. We just talked this week about a $1.7 million fraud case inside a state agency. Fraud makes companies cautious, and caution can feel like pushback. That is the reality of today's environment. Social media amplifies, social media kind of makes negative stories more bigger than what it really is in reality. No one posts, "My claim was processed smoothly and paid correctly," but someone who feels wronged will absolutely post that. One viral video can create a belief that every claim everywhere is denied. But here's the part that rarely trends online. The vast majority of claims filed are paid, either fully or partially. After major hurricanes, carriers in Florida had paid billions in claims, billions with the B. If companies truly denied everything, lawsuits and regulatory action would shut down the market. This is where having an agent matters. My job is to not approve or deny your claim. My job is to help you understand your policy before you ever need it, because most frustration comes from surprises. If someone thinks flood is covered and it's not, that feels like betrayal. If someone understands flood is separate coverage from day one, there's no shock. Education prevents outrage. Clarity prevents conflict. There are practical steps you can take. Review your policy before something happens. Like I always say, review your policy at least once a year. If something has changed in your household, let your agent know so we can kind of better guide you. We can make sure there's really no gaps in the policy. And if there are gaps, you understand those gaps and you're okay with those gaps. Understand your deductible, ask about exclusions, document your property with photos and records. Preparation reduces frustration dramatically and also helps your claim go smoother and faster. Insurance works best when expectations match reality. Here's the honest answer. Insurance companies do not exist to deny every claim. They exist to enforce contracts and manage risk predictably. Again, insurance companies do not exist to deny every claim. They review claims carefully, they require documentation, they follow policy language. That can feel frustrating in the moment, but that is very different from intentionally trying to avoid paying everyone. If systematic denials were happening, regulators would intervene quickly. We've seen that. Some insurance companies got hit with not sending certain forms on time, not contacting companies, contacting customers when they're within the time frame they're supposed to. They got fined. Insurance companies don't want to be on that list of fines from the state. Nobody wants to be on that list. So the legal and financial consequences for insurance companies of just trying to deny every claim would be massive. They wouldn't be in business anymore. Like they couldn't handle that. So companies are not trying to just deny. Insurance is not perfect, however, but it's not a operation designed to trick policyholders. It is a risk-sharing contract built on math, oversight, and regulation. When you understand what you purchased before you need it, the entire experience changes. This is why these conversations matter. If today's Free Friday Quick Bite helped you understand how claims really work, now is a great time to review your coverage and make sure you know what your policy does and does not cover. If you would like to request a quote or insurance policy review, visit our website at isominsurancegroup.com. And again, it's right below me in this video. Preparation always beats reaction. If you found this episode helpful, please like this video, share with someone you know, your friends, your family, your relatives, or even your enemies. Drop a comment below with questions you would like for me to address in any future episodes. And remember, Quick Bite episodes drop Monday, Wednesday, and Friday at 2 p.m. Eastern. And oh, I keep forgetting, please subscribe to the channel. When you subscribe to the channel, you get notifications when a new video drops. So it keeps you abreast on when a new video drops, in case you forget, like me. This video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional regarding your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching. I will see you next time. Please stay safe out there. Enjoy your weekend. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.